Well, hello, everybody. This is one that's been kind of on my mind for quite some time, and it's complicated and it's tricky, but it's also very interesting. And if you have any Bitcoin, you probably want to spend 10 minutes watching this show because it's very important for your future. And there's so much goodness that's coming your way. So let's go. And it is a little bit complicated, but most things are in life. Let me stick myself down the bottom right hand side today, see if that's any better. This is called debt demonetization. I just thought last night, I've been thinking about this video actually for many weeks now, but I thought the term demonetization is kind of funny. Anyhow, it's not an evil video. And of course, not financial advice. And shout out to Patreon. This is from Amy. I definitely become a James addict. I look forward to the wisdom. Joined Patreon and learning so much. Great to have you on board, Amy. Now, the agenda today is a little bit tricky. Hi, Silicon Valley Stoic. But we'll talk about debt first and how the world is built on a house of cards of debt. And it's going to break in a matter of time. But the question is, could Bitcoin save the day? And what does Michael Saylor see? And then we'll compare traditional debt to Bitcoin debt. We'll look at some real-world examples of how Bitcoin can be used, for example, to buy a house, and all the benefits that come along with that. We'll look at some controversies and criticisms, and then finally the transformative potential and price targets for Bitcoin. So a lot in this one. It's meaty, but I'll break it down as simple as I can. First of all, we do have to talk about debt first. And debt is a little bit tricky because so much has changed in the world. And the first three slides are given towards debt because that's what I'm trying to frame up as what Bitcoin can attack. And one of the key things to note now is financial markets now are debt refinancing mechanisms. They're not capital allocators, which means basically everything has changed. And who can refinance, and with what collateral? These are all elements that we really need to understand very carefully. And again, I did warn you, it's tricky, but it'll get better. I promise you that. But now we see a new world where financial plumbing, systemic risk, and liquidity survival is the most important thing out there in the world. And we have a whole bunch of weird stuff going on right now. We have a lot of times people talk about central banks being the collateral backstops just to keep economies alive. You have things like QE provisions, the dealer of last resort to backstop collateral. You've got repo operations to stabilize short-term funding rates. The reverse repo and the repo facility in the US alone is massive. You have FX swaps to cover cross-border dollar shortages and so much more. And shout out to Capital Wars too, where much of kind of these ideas come from as well. But modern central banking is less about interest rates and it's more about managing the plumbing, keeping the money rolling. And everything is built on a house of cards. An example of that is this. If this doesn't terrify you, I do not know what will. This is an eye-opening chart. Shout out to our friends in Spain. We have people in Spain here. We have people in the UK here. We have probably some Italians in here, some French, some Germans. But again, this is European nominal GDP and public debt. And here you can see this is simply not sustainable without a great reset. Every year I hear the term great reset come up more and more because, again, if you're in Spain or the UK, something's got to give. Something has got to break. And that's what this chart tells you. It's basically far too much debt, not enough GDP. And in many places too, like the GDP growth from the UK has actually gone up quite steadily. Not too bad from 2000 to where we are today compared to other European nations. Maybe some of that is because of Brexit. But the debt to fund it is not good. So that's the scary part. Anyway, the other chart I want to spend a second on before we get into the Bitcoin story is this. World debt has crossed over 255 trillion. Actually, since this chart is a couple of years old, it's probably like 300 trillion. It is 300 trillion right now. What am I saying? DBF 430. Thank you for coming. But look at the speed at which it's rising since 1997. It's just, governments around the world are just spending like drunken sailors. And don't know if we have any drunken sailors in the audience, but if you've ever seen them, apparently they spend a lot. Anyway, that's governments. Let's get into the Bitcoin story here. This is inspired by Lord Saylor, friend of the channel. And he sees things, on his journey since 2020. And I've been with him on his journey since September 2020, by the way. But he now, the narrative on the versatility and what I call the financial jujitsu of Bitcoin changes all the time because it's evolving and new financial use cases are coming. But now he talks about Bitcoin as digital capital rather than a currency. And he talks about, it being a city block in New York, for example, in Manhattan, and what it takes to buy that and keep it and hold it, because he sees it as a superior store of value compared to traditional assets, not just like gold, but also debt instruments. And this is where people always trip up. They can't wrap their heads around the fact that gold is an asset and a debt instrument is an asset. So if you take nothing else away from this video, remember that everything is built up in this regard. And this chart that he often refers to, shout out to Jesse Myers too, but this is the world, the makeup of nearly 900 trillion, soon to be 1,000 trillion in assets. I'm sure there's a better word for that. I can't remember what that is right now, but you can see Bitcoin is a tiny sliver. It's now just under 2 trillion. Bonds are 300 trillion. And the story I'm going to talk about today is how Bitcoin can start eating that bond segment. Excuse my big gold arrow chart, but I want to show you what this whole demonetization is all about. Can it do that? We shall see. I'm going to walk through some examples too. Now, a couple of quick points here on how, again, the inspiration for this is from something I heard Michael Saylor say, and he envisions Bitcoin replacing debt as a store of value, which will reduce sell pressure and increase scarcity. So if you have Bitcoin, you no longer have to sell it to buy stuff. You can put it up as collateral on what they call pristine collateral. Banks will want this collateral more than any other collateral out there because it's hard, it's scarce. But the key kicker for this, though, I want you to get away. I've got to turn off my make myself on the left here. Michael Saylor's theory is if Bitcoin becomes that pristine collateral, guess what happens next? There'll be nobody selling for lifestyle chips, as Raoul Pal says. Everybody can guess what they can do now. They can borrow against their Bitcoin. So all of a sudden, anybody who holds Bitcoin and anybody who has taken the 1,000 hours to understand it, they will not sell. Okay? They can now live off of it. I'll walk you through an example as to how in a minute. And that, per Saylor, means this pristine collateral could become the backbone of the new digital world, which we're going into very rapidly, by the way. Now, a couple of things as well. Let's compare traditional debt versus Bitcoin. And this is, I'm trying to compare maybe what's in the back of Saylor's mind. I could be wrong, but this is my interpretation. So traditional debt has limitations, okay? Debt instruments typically lose value over time due to inflation and interest obligations, etc. If you've owned a bond in your portfolio, they said 40-60, 40% bonds, 60% equities, you got toasted over the last many years. And debt-based assets such as bonds and mortgage-backed securities carry risk of default, especially during economic downturns, which we could be going through one now. Bitcoin broccoli, hey there. Traditional debt requires also constant repayment, often forcing asset sales to cover obligations. You've heard of stories during the last global financial crisis. Everybody had to dump their real estate, cascading liquidations just to pay obligations. And debt is also tied to a centralized financial system, which, as we've seen just in the US over the past 100 days, it's very vulnerable and sensitive to policy changes, both good and bad, and inflation, and so much more. Now, when you hear that about the debt stuff on the left, you think, oh, who would want that? Anyhow, let's talk about the stuff on the right. This is Bitcoin's advantages over debt. Bitcoin, as we know, has a fixed supply of 21 million Bitcoin. But if you ask me, there'll never be more than 15 million Bitcoin because so many are lost. And that creates inherent scarcity, unlike fiat, where they just print it willy-nilly all the time. Also, it is decentralized, it's resistant to inflation, and it does preserve value over time, but it is volatile. So we'll talk about that later. Now, holders can store value long-term without pressure to sell it for debt repayment, which is very important to the use case I'll get to in a second. And Bitcoin can serve as reliable, pristine collateral free from traditional debt risks, which is also massive. So if you compare the left to the right, which one would you like? The answer is probably the one on the right. Now, hey, Luke, good to see you. Now, this whole concept, again, just to reiterate, what could happen next? Again, if Bitcoin becomes pristine collateral, it becomes a superior alternative to traditional debt instruments that I've just highlighted, like bonds and loans, which lose value over time due to inflation and interest rate risks. Like, who in their wild mind would, give cash over to buy a debt instrument and get paid 4% per year when debasement is much higher than that? That's the big thing. And if Bitcoin does become the preferred store of value, this will cause holders to retain it rather than selling it to cover debts or expenses or lifestyle chips like houses or boats or university education for children, all that type of stuff. And unlike debt instruments that require servicing and repayment, this one doesn't. I'll show you an example. And the shift reduces reliance on debt-based financial systems, potentially, this is the big part, potentially displacing $1 trillion of market cap. In fact, as I showed you, I think on slide 9, $300 trillion. Massive. Even if it just took a sliver of that use case, that would be huge. And that's the game that Saylor believes will happen. And he's already doing that to a large extent in his financial jiu-jitsu for the company MicroStrategy, which is now called Strategy. Again, all goodness. Now, there's a couple of things here that I'm going to turn off my little screen for and walk through this. And this is kind of like the feedback loop that makes it very special. So if you look at here, as Bitcoin, if it becomes a preferred store of value globally, like a new gold 2.0, and we've seen what gold has done this year, holders are less likely to sell to cover debts. But the combination, this is the key part, fixed supply and lower market supply due to holding creates increased scarcity. And then we have the halving, which also increases scarcity. And then the growing demand from not only just investors and institutions will push Bitcoin's price higher. Now, the key part here is I talk about treasuries a lot. Treasuries are buying up everything. What happens when the treasuries understand how they can create debt markets with their bags? Think about that. That's why some people believe Michael Saylor could become the biggest bank on the planet because they have over 550,000 Bitcoin right now. Bonkers to even think about. And we've just showed you the size of the debt market too. But this is the feedback loop. Again, scarcity. Price goes up. Demand goes up. You don't need to sell it anymore. Scarcity becomes harder and harder and harder. You won't be able to get your hands on Bitcoin. That is a crazy, crazy theory. I remember late last year, I discovered a theory where it becomes so hard to get your hands on Bitcoin, some people disagree with this, that the only avenue could be to buy stock like MicroStrategy and other treasuries, again, making them even more powerful. This is the feedback loop, which if it does kick off, buckle in, ladies and gentlemen, sig div. And the more I dig into this, the more I think about it, the more I am reticent to sell any Bitcoin. Anyhow, there are some cons against this theory as well. I'm going to spend a second on these guys. Obviously, the supportive arguments. Yeah, it's a reliable store of value. I'll show you an example in a second. Yeah, it does have a potential to reduce reliance on debt in the global financial system, which is a house of cards ready to collapse, ladies and gentlemen. And the growing institutional interest is off the charts. It's bonkers. On the right-hand side, however, it's volatile. People don't like that. And that means it could get a bit of a ding. But as it grows up as an asset, as it gets larger in the multiple trillions of dollars of value, it'll become less volatile. But at the same time, if you zoom out and you hold it for 3 years, 4 years, you're going to make money. And that's just the way it works. Now, critics argue as well that viewing Bitcoin primarily as capital limits its utility as a currency for everyday transactions. But we know the whole narrative is store of value, so forget that. And dependency on widespread market and regulatory acceptance makes the theory uncertain and subject to external risks. Again, the type of stuff that's happened in the US over the last 100 days with SAB 121 and all the other regulatory support for Bitcoin means other nations will follow. So again, the critical points are weak. Volatility is probably the worst one of them all. But let's get into an example. And I did hint yesterday, shout out to our friends in the UK. I did share this slide yesterday. I normally do the US. I'll do Australia soon. But this is UK Price House Index. And the reason I'm going to show this is the impact of using Bitcoin as collateral to buy a house. So in Feb 2017, it would have cost 258 Bitcoin, 9.48 in 2021, and 3.18 in 2025. And you can see the price of a house in British pounds sterling has gone up over this time, but not that much. But the actual appreciation of Bitcoin has gone up an awful lot more. So the question is, and this is where people also get tripped up, is what happens if I borrow against my Bitcoin and the Bitcoin goes up in value and so does the house I buy? What does that actually look like? Well, here is a simple example. Now, there are places where you can borrow against your Bitcoin. They're getting more and more mature. Wait for big, trustworthy players to do this as we go forward. But just imagine a situation where you wanted to buy a home for $500,000 in 2023. Okay, you loan, you need $500,000. You probably put some down, like 5 or 10%. Maybe with Bitcoin as pristine collateral, you may need not even have to put anything down. Bitcoin price is say 30K, ballpark number at the time. So you need 16.67 Bitcoin. Okay, now the crazy stuff is, fast forward 2 years to 2025, Bitcoin triples in value, call it 90,000. It's 95,000 as I speak, it's 95,000. So it's a little less here in this example than it is live right now. And your collateral, okay, is a lot higher. So the house increases from $500,000 to $530K over the last 2 or 3 years. And your loan balance drops to $480K because you're paying some off. And the effective Bitcoin collateral debt burden, this is the key part. Your debt burden shrinks from 16.67 Bitcoin for $500,000 to 5.33 Bitcoin, not unlike this chart here. So what exactly happened? And this is the crazy thing. So imagine a situation where you are using Bitcoin to buy a house or fund your business. You know, it's all the same. If you want to expand your business to 5 trucks instead of 1 truck, maybe you borrow against your Bitcoin. But here you see the 2023 value is 30K for Bitcoin, goes to 90K. The change is 60,000 up in price. Your house goes from 500K to 530K. Price goes up $30,000 per house, not per Bitcoin. The other one is 60,000 per Bitcoin. Your loan is 500K, 16.67 Bitcoin in 2023. It goes to 5.33 Bitcoin. So what happens to the 11.34 Bitcoin that's now excess? Well, your loan to value goes crazy. And that's the good news. Also, your interest paid can actually be paid by taking a small sliver off of your Bitcoin. You sell about 0.1 Bitcoin to pay your interest. So you're not even getting cash out of pocket to actually pay this interest. And that is the crazy thing. So, but the story gets a little bit better, a little bit different. And I have a new twist on this too, which has been spoken about for quite a bit over the last, thank you, Chaz, as well, and Sean D, and our great moderators out there, and T&D Tesla and K8. Thank you all for coming. But let's turn this around to another way to think about it. And maybe we should do a quick survey. Would you borrow against your Bitcoin to buy a house? And if so, during the bear or the bull? That'd be an interesting survey. Anyway, that's the example here. But what you could do, instead of having a $500,000 house, now you have still your 7 Bitcoin. Maybe you buy a $2 million ranch next or something. Who knows? But that's all up. Now, this is another key point. I'll turn off my little camera here of what would happen if a nation state tries to solve their debt problem using Bitcoin. So this is another little twist, and shout out to Matthew Siegel who put this cool little chart together. And I'll try to walk you through it. So imagine a nation state like the US that has 36, 37, 38 trillion dollars in debt, growing all the time. But their treasury decides to buy 1 million Bitcoin over 5 years. I'm going to jump out for a second. US already has about 203,000. They need to buy approximately another 800,000 to make this work. Are they going to buy 800,000? Every sign I see says they are going to try to do that. Maybe that's why Michael Saylor is buying Bitcoin hand over fist, because he knows the big players are coming. Arizona State just said they're going to allocate billions into Bitcoin as well. Texas will follow, and then the rest will follow. This is the game theory that we've been waiting for since 2017. It could at last be happening. But let's look at this example here. So let me try explain the chart. On the left, you've got the amount of Bitcoin acquired by, say, the United States. And then across the top is the compound annual growth rate of Bitcoin through 2049. Of course, it won't be linear. Some years will be high, some years will be low. But many people like Michael Saylor believes it'll grow at 40% per year. In this chart here, we're going to use 25%. Now, the early years could be a lot higher than the later years, but it averages out over time. And if the US Treasury buys 1 million Bitcoin over 5 years, starting with at a price of about 200,000 per Bitcoin, and assuming as well the US debt grows by 5% each year, slower than the 8% over the last decade, and Bitcoin's price grows by 25% each year, by 2050, the US Bitcoin reserve will be worth 36% of the country's debt. Okay, 36% of the country's debt. The debt is growing, but the appreciation of Bitcoin is growing faster. Just like we showed you the reverse case of this house example. Boom, boom. This one. Okay, the house is going up in value, but the value of Bitcoin is going up much faster. So the house will become the US debt. That's going up in value, but an allocation to Bitcoin will help reduce that debt over time if they choose to sell the Bitcoin to pay off the debt, or just hold it and have it on a big balance sheet somewhere. And that's the crazy thing about this as well. And getting back, could this happen? You know, if we run some numbers as to what the price prediction would be for Bitcoin, and Saylor hasn't given an exact price for Bitcoin demonetization of debt alone, but his broader projections suggest that Bitcoin could reach somewhere between $9.5 million to $23.8 million per coin if its market cap hits 200 to 500 trillion. And remember, that still isn't even a spit in the bucket for the size of the debt market today. And there are so many other use cases as well for Bitcoin. That's what makes this fascinating. And just to summarize as well, one other thing, crypto-backed loans are coming. All the banks in the United States are thinking about this right now. They're trying to put the infrastructure in place. The Citibanks, the Wells Fargos, the Chases, JP Morgans, all these guys, they are trying to put these crypto-backed loans in there. And you get the same cash without selling your Bitcoin. So you stay in the game, Bitcoin price goes up. The opportunity cost of selling a Bitcoin in the last bear market at 15,000 was huge as it went to 100K. There's another cool kicker: no capital gains tax, no credit check required, and no bank drama to deal with. Some of them will fund within hours, okay? And some people call this, is what the wealthy do and how they get rich. They borrow against their assets. Imagine you're Jeff Bezos, you got hundreds of billions in Amazon stock. You want to buy a boat, you borrow against your stock. You don't sell your stock. Therefore, you don't incur capital gains taxes, all right? And this isn't just smart, it's very strategic. And you got the tools to play the game just like Elon Musk, but just on a smaller scale. So everybody, think about it. And remember this too. I'll turn off I'll make my little camera laugh. No, turn it off. There you go. The world reserve currency periods. Portugal, 80 years. Spain, 110 years. It's funny, we're talking about Spain again. Netherlands, 80 years. Shout out to the Dutchies out there. France, 95 years. UK, 105 years. And now the US is in the 102 years and counting, which means it's only a matter of time before they are toast. Ladies and gentlemen, fiat, all fiats go to zero. That's if the history of the world repeats, which it often does, and probably will this time, like no exception. And final conclusion, let me bring this up, bring myself up too. Fiat's dying. The conclusion for this whole video. By replacing debt-based assets with a scarce, inflation-resistant store of value, like Bitcoin, will drive scarcity and demand and creating that feedback loop. And this will elevate not only price, but also adoption. He who gets in first, or she who gets in first, wins. This is the potential transformative shift that will challenge the traditional financial system and pave the way for a new economic paradigm. We do have a live poll. This team is incredible. So this is brilliant. Yes, you guys are so good. So would you borrow against your Bitcoin to buy a house? Yes, during a bear. Yes, during a bull, or no? The answer was yes during a bear, 37%. The clever thing about doing that, ladies and gentlemen, this is great, is because if you do buy during a bear, your collateral loan to value ratios will be extremely good. If you do it during a bull, 26% yes, they said they do that, 37% yes, they do it during a bear. Again, it depends on the bull. During a bull can be risky. So if you're putting up, say, 10 Bitcoin to buy $1 million property and the price of Bitcoin falls to 50,000, you could be seriously in the water. So therefore, you need to bump up much more collateral in your loan to value to be safe so you don't get liquidated, just like with anything else. And those who would not borrow against their Bitcoin, 37% said no. I guarantee you, if you are a Bitcoin holder over the coming years, you will probably borrow against your Bitcoin because it's going to be glorious. Think of the benefits. And you probably didn't see these benefits before you said no. But remember this, screenshot this, keep this. It's a life hack. Okay? How to get wealthier. You don't sell stuff, you borrow against it. That's what the ultra wealthy do. That's the video for today. Hope you like it. Hit the like and subscribe if you do. I appreciate the mods in the chat and everybody coming here. And hope you enjoy the show. This is the future, everybody. This is good. And yes, Bitcoin is volatile, but it's also fun. The best assets in the world are volatile. Thanks all. Have a great night. Bye-bye.